Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
Starting another session with very positive cues overall. Global markets are looking pretty strong, right?
Absolutely, and the bulls have it, right? This morning, at least, all the cues are stacked up in favor of the bulls. Let's see how it goes. Even earnings looking pretty good, the likes of Axis Bank.
Absolutely. And, the NASDAQ is done 8%, Sonia, in the last 3 trading sessions. And, here in India, we've been for the last, about 2 months or so saying, well, is it time to buy IT stocks? Is it, and because that was the one big sector which was down in a very large way. And as the NASDAQ has started to, because the changes on your screen, the NASDAQ is up 2% overnight. The last 3 days, it's up 7.5%. Year to date, it's up 8.5%. So basically the bulk of the NASDAQ gains have come in the last 3 sessions, as you can see very clearly. This is kind of given a little bit of confidence. I always say there is very little to do between, NASDAQ companies and Indian IT services companies. Many of them are the large companies. There are product companies. Here it's software services, but it's tech. And when NASDAQ does well, it does provide a bit of breathing room for tech here in India as well. And that move here in India has started. I'll get to that in just a bit. So, that's basically the global setup, which is very, very positive. Nifty yesterday ended higher, but it came off the highs of the day. We ended closer to 18,100. The day's high, we were closer to 18,200, not quite there. 18,162 or so was the day's high. But then, we pulled back a little bit. Of course, the first level to watch out will be the day's high. I think we'll take that out straight at the word go this morning at open. But then on the way higher, you got to watch for levels like 18,184, which is, again, something which is within reach with the 90-100 point open on the SGX that is indicative of. And then we get to the 50% retracement of the full fall, which is at 18,324. Is this the kind of break out of this range that we've been kind of talking about for a while? This range which has been in place all this year from 17,800 on the downside to 18,200. And it looks like if it's to be so, perhaps it'll be powered by the IT names. On the way down, 18,016 is the near-term support level. It is nothing but the low day before yesterday. And then the bigger levels that the Nifty must defend if there is selling which comes in at some point is 17,853 and then 17,761. These are well-advertised levels. One is a swing low. The other, of course, is the low that we saw late last year. So that's Nifty. Bank Nifty is the other interesting one. Bank Nifty ended about 0.75% higher. The resistance for the Bank Nifty comes in at 43,100. There's a falling trend line from the highs of December 15th. It's a clean downward sloping trend line. And on that, the resistance comes in at 43,100, which is not very far away. 200, 300 points away from where we are on the Bank Nifty. And above, once that trend line is taken out, the high of 43,576 could come into play. So that's the setup. I think it's been pretty clear that this is not a market where there is unbridled momentum on one side. There are pullbacks, then there is dip buying which emerges. So if you're trading, as has been the case for all of this year and maybe last year as well, buying the dip has made more sense. But I think it's slowly confidence is starting to come back. US is supportive, and the IT services pack is doing bulk of the heavy lifting, like what we've seen yesterday and the many sessions before yesterday as well. Guys, hi.
Hi, I genuinely thought you're going to start by talking about the weather because in Mumbai it was 20 degrees this morning, right? It was 18 yesterday. Generally in Mumbai it gets to this point, I think mid-Jan, and then it just goes away in like a week or so.
But it's not going away too quickly this time. I think on a day-to-day basis, it's getting a little bit colder. Particularly this morning, it's freezing.
We're all getting older, right?
That's the other factor at play.
At least I am.
Managing the cold is tougher. But yeah, it's cold winds, but hot cues, right, in the markets. I guess we can summarize it that way. What stood out for me really is that over the last many days, the FI selling has reduced quite a bit. So even in yesterday's trade, FI sold about 220 crores, barely something. But if you put together the last 10 trading sessions, you'll notice that from an average, way back, we've gone up to about 10th Jan or so, On an average, they were selling to the tune of around 2,000, 3,000 crores on a single trading session. And that has gone down to just about 300 crores. Of course, Jan 20th was a big sell figure. But on an average, if you see, the FI selling has reduced quite a bit. And that's something that the bulls will take with both hands. In fact, DI has bought about 434 crores in the cash markets yesterday. Very strong handover from the US. Second day running, Tesla had a big move on the upside. The Dow was up about 250 odd points, and very good earnings from Axis Bank. So there is not a single private bank that has disappointed this time around. Axis Bank adding to the list both ICICI Kotak that they began, NII growth of over 30%, NIMs at a 30-quarter high. So the important point is, you know, the previous high in Jan itself was about 18,230. That was the Jan high. Looks like the market is sort of getting to that level. Could be a bit of a resistance, but with the Q so strong, perhaps the market could take that out. The momentum is now on the upside, and the SGX Nifty is at the high point of trade. So the bulls are sort of tightening their grip on the market. Just a matter of time before these, you know, levels get taken out, I guess.
That's right, Sonia. And yesterday was a good trading session, but can we follow yesterday's good trading session with another good one?
Yeah.
You know, and the Qs are up there to start off in the green as well. The Nifty is running, a race, and the start at least is going to be off the blocks in style. But can it hold on to that? That's the big question. Now, yesterday the FIs, they sold less, but actually their participation was far lower. It was 30% lower in comparison to the 10-day average, the gross participation, that is. The second point is the institutional numbers, is the FI and the DI number together. That was a positive number of close to around 200 crores. So you like that. What are the FIs doing the FNO market? Well, on index futures, they covered close to 10,000 short contracts, but now they're net long on the index. Remember, we were talking about this. Earlier, the short positioning was at around 65%. The long positioning was at around 35%. Now, the 35% has moved all the way to around 56%. So some part of that short covering has played out. On the option side, well, the data coming from the FIs is positive. They bought more calls than puts, and they wrote more puts than calls. So you like that as well. Focusing on the options data then, on the Nifty itself, the 18,100 put, the 18,000 put, between them, 58 lakh shares were added out there. And there were signs of writing out there. Remember, we play out expiry tomorrow. So the put writing is something that's very, very important. But for me, what is heartening is the Nifty Bank, it's come back in style and it's finding its form. Yesterday as well, it was an outperformer in trade. And on the 42,800 put, the open interest was up by close to 15 lakh shares. And the premium's around 170 rupees. The sense you get is there was writing being seen at that level. So on an average, the premium out there would have been 200, 250 rupees odd. Which brings us to the levels. Now for the Nifty, well, the important level, since the 42,800 put was seeing writing, the 20 DMA becomes important. That's the crucial support out there. So keep an eye out on that. Levels to track, 18,200, well, that's a resistance for the Nifty. Can the Nifty get past that and continue trading above that? Because as of now, the positioning is that we'll defend that mark. The crucial technical level on the upside, if we get past that 18,200, is 18,280, which is the 50 DMA. Support is at around the 20 DMA of 18,050. So we're going to start in the green. We need to trade above that 18,200 odd mark and try to make a bit of a dash towards the 50 DMA. Most crucial, the start well in the green actually as we speak.
Absolutely. I mean, a 100-point higher start on the SGX Nifty is what we have, 95 points. Well, before we start, let's tell you what's lined up here in the first half hour of the show. We'll get you updates from markets across the globe. Gary Schlossberg of Wells Fargo Investment Institute will join us to discuss the global setup and how he sees it. Our research team brings you CNBC-TV18's list of top 10 stocks to watch for the day. That's coming up. And at about 8:30 in the morning, we have Deepan Mehta of Elixir Equities to talk shop in terms of markets and stocks to watch out for as we start another trading session.
Okay, so lots happening in the next 2.5 hours, and keep it with CNBC TV18 for all the action. By the way, it's a big day of earnings as well today. So you have Maruti, there's TVS Motor, there is Colgate, there's United Spirits, a lot of non-index large caps as well coming out with their numbers today. But on the equities front, we have Vikas Jain of CLSA who says that the FY23 fiscal deficit may end up being 6.2% of GDP versus an initial budget of 6.4%, as a higher welfare and subsidy spending as well as a miss on telecom and divestment receipts will be more than offset by very strong tax collections. He forecasts an FY24 fiscal deficit of 5.9%. He says with this being the last full-year budget before the national election in early 2024, they will keenly watch any measures to push rural demand. He expects reasonable capex growth but will keenly watch out for any innovative infrastructure financing. Vikas says any tweaks to tax incentives for home loans and investment would be relevant for some stocks, and changes in taxes on cigarettes would impact ITC. That's a primer on what to expect from the budget, perhaps.
All right. Well, let's get you some money market views as well. Bhaskar Panda of HDFC Bank says the dollar index fell below the 102 levels and continues to remain below that level, helping Asia ex-Japan currencies. As a result, he says the rupee opened below the 81 to a dollar mark yesterday, but got bought over to push the dollar INR pair higher at close. He says oil remains biddish, and given this backdrop, expect the dollar INR pair to trade in a range of between 82.35 to 82.5 to the dollar for the day.
Okay, and let's also get you some views on the bond market. Bhaskar Panda says Indian bond market yields had a mild rally due to more supplies. He said wait for the budget announcements is the watchword now. Expects the 10-year benchmark bond yield to trade in a range of 7.35 to 7.38% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. Well, we're looking at Axis Bank, Tata Communications, Gland Pharma, Poonawalla FinCorp, Supreme Petrochem, Shoppers Stop, and KEI Industries. They are stocks on the back of positive news flow. But on the flip side, we have Concor, Syngene, and Zensar Technologies that could react to negative news flow.
Okay, well, Gary Schlossberg is joining us now. He's global strategist